Welcome back everybody to another video. So I'm going to break down my trading day today for you guys and the moves that we caught inside of the war room today. So as you guys saw on my Instagram posts and on my, well, not my post, my story post, and as you guys also saw as well on my broadcast channel, I ended up making 17K today, basically scalping the NASDAQ. So two positions were on some longs, and then one position was on a quick short on a scalp, which the trading day was pretty good. I feel like I did very well, but let's kind of get right into it. So initially on the trading day, I wasn't looking to go short because yesterday we actually did see the sell-off from CPI that I was anticipating. For those of you guys that are in the war room, we talked about shorts at this level, 17,684, down into the support range that we saw price bouncing off of basically market open, which is going to be 17,542, which we saw that happen. Now, in the market open, or during the pre-market at least, we actually saw price come all the way up and give us a break of structure at 17,712, which that is a break of structure. And to me, after price action just formed a lower high point, then a lower low point, and then came up and formed a higher high, most likely there's a greater chance that at some point we're going to see price pull back a little bit and then continue to go up and make new highs. Now, I was looking to continue to take longs here on the NASDAQ as long as price can maintain above this key level at 17,684, which is going to be this area of support. So moving into the first trade of the day. Initially, I was looking for a break of the highs to see if price could take out these highs and continue to come up into the 17,796 area, which market open and price started to pierce above that area, but I don't trade market open. I always wait until preferably like 9:45 in the morning for me to actually start taking positions, because in the morning I like price action to print and start giving me data as to where the market is actually headed towards the upside or towards the downside. And in this situation here, we saw price pull all the way back down into 17,685. Now, I knew that if price action were to take out 17,685, there's a chance we can go lower. And at that point, if we do see price action take out 17,685, I'd probably want to wait for some form of a retest to actually look to go short, because when you see price initially testing an area, doesn't necessarily mean, especially for the first time like this, where we have price action come all the way down, I'm not initially just going to start selling right off of the bat, especially that I'm looking for some form of a bounce play here at 17,684. I'm going to want to wait for some form of a break and then a retest in these types of situations where price action is just pretty strong to the upside and we have more bullish signals than we have bearish signals. Now, a few bearish signals would have been that we had a break under the key level, a pullback, retest, rejection. We have a break of structure in the lower time frames, and we're starting to reject the key level and it is holding as resistance. That would be a bearish signal. Then I would start looking to go short, but that wasn't the case. So now flipping between the 5-minute and the 3-minute time frame. On the 3-minute time frame, we originally had a potential entry here at this rejection at 17,694, but I still thought it'd be too early for me to actually want to take those long positions at that price range, because the 5-minute time frame closed pretty strong down here at 17,685. So this is not a candlestick I'd want to go into. This is where time frame correlation is so important. It's like, okay, well, we have a super strong close here on the 5-minute time frame, and on the 3-minute time frame we actually have a pretty weak bearish candlestick close. So right now it's not making any sense for me to really want to actually go short at this very moment in time. So I'm going to continue to wait. And you know what? If I miss out on the bounce play, that's cool. I could take potential long positions at a break of the highs here at 17,741, which price action initially pumped, and it ended up rejecting this resistance range, which we have based off of this hour time frame, which is all the way over here. As you guys can see, we have support, which it did hold as resistance in the pre-market, where we have resistance, and even right here, resistance here as well. So initially, I'm not going to be looking to take any long positions there. Either I want to see price take out this resistance range, start turning back above support, and then price action take out these highs and continue to go up and make new highs. Now, as price action was starting to come back down, it's like, okay, well, now if price can give me this retest rejection, then that's when I'll look to go long. Now, price action reject, and I actually did hesitate to take that long position, because on the 5-minute time frame, again, I go back here on the 5-minute time frame, we had a pretty strong bearish close, which again, like I would have liked to seen a bigger rejection for me to immediately go long than in there. If I would have seen a bigger rejection on that 5 minute time frame as well, I most likely would have taken the position. Now, once price action started to take out the previous high of this candlestick and this candlestick closed with an engulfing, I simply waited for this candlestick to start going bullish, and that's when I executed myself on the first two short positions. Now my stop loss, I had a little bit of a tighter stop loss just simply because I wanted to get the best R multiple possible, and I knew after two retest rejections that if price were to come all the way back down and basically start trading under this zone again, then most likely I was wrong, and I want to get out of the position as fast as I possibly can. Now my first target for this bounce play was going to be this area of resistance, and then my second TP for a home run trade basically would have been the next key level. Now initially I was almost there at my first TP, which I was floating roughly around a 1.6 R multiple on this trade. And basically what I was letting everybody inside of the war room know, I was like, basically, you know, if we do see price action fail to start breaking above, because we should see momentum kind of just blow right through this area, especially now that we're trading above this area. And I was really attentive to like this 1 minute time frame here. If we start seeing some rejections, then I'm going to close the position, because if we saw price reject this area once, let's go to the 5 minute time frame. If we saw price reject this area and come all the way back down to support once, and we saw price do it again 2 times, you know, there's still a probability that on the 3rd time it can come all the way back down. So I'd rather secure profits and get back in if the trade is still valid, which I'm cool with, you know. So in this situation here, price action ended up starting to come back down with a lot of momentum based off of this 1 minute time frame. And now I was like, you know what? Right once price action pierced under this low on the 1 minute time frame, I decided to close the position, and price ended up coming all the way down. Now, keep in mind, in hindsight, we can already see that price would have never hit my entry and it just flew. It's like, yeah, that's easy to say when it looks like this, but what about when it looks like this, where we have 1, 2, 3 rejections towards resistance? I'm not thinking about, hey, Raul, you know what? Like, you could have just held it and you would have been cool. I'm thinking about, okay, well, I was risking $4,000 or $5,000. Now I'm up $4,000 or $5,000. You know, do I really want to give all of this profit back when I could just close it now and wait for price action to come all the way back down to support to give me a bounce play? And if I get into a bounce play again, then fantastic. You know, I secured profits and I'm essentially making double the money that I would have. Because remember, it's easy to tell like, hey, you know what, I would have held that position. But when you're actually in it and you actually have money at risk, for me, what I think about is the game of probabilities. I'm not emotionally tied to the dollar. It's just not the case. When you're going to become a professional trader, you need to remove emotion out of it as much as possible and start thinking with as much logic as possible. Now, if it would have been different if I would have been like, you know what, I'm just going to move my stop loss to break even, and whatever happens, happens. And if I made that decision, then cool, I could have gone with it. But I wanted to secure profits because it's a pretty choppy day, as you can see in the pre-market. Not only in the market open, we had a big move up, a big move down, then a move back up. You know, I don't know if price is going to continue to consolidate all day. So I ended up securing the first trade roughly around this area over here for about a 1-to-1 risk to reward ratio, which isn't optimal. It's not my like targeted risk to reward ratio, but you know what? A W is still a W, and especially that my win rate is above 60%, I can live with the R multiple of a 1-to-1. Now again, it's not what I shoot for, but again, I'm being transparent as possible my results here to show you guys that like trading is never always going to be as perfect as you plan it out to be. Now, when it came to my second position, so again, you know, going back into the game plan of the day, it's like, okay, well, we could look for a bounce play here, we could look for a break of the highs here. Originally, I was just, again, on that 3-minute time frame. As price continued to pump, this candlestick was like, okay, well, we've seen price start to come back above resistance, and the 3-minute candlestick closed under. So it's like, okay, well, can we see price come back down? If we see price come back down, we could, again, look for that bounce play if the setup is valid. Now, originally, I was waiting for a close above this candlestick, or at least above the highs, because in the morning we would have gotten faked out if we would have taken that position right away off of the bat here. And what I also saw as well is that on the 1-minute time frame, this candlestick had a little bit of a follow through, but by the time this 1-minute candlestick closed, that's when price action ended up closing bearish, and I didn't take the position. With the break of the highs, what I'm doing right now is basically looking for a 1 minute candlestick to close above. Notice no close above, no close above, no close above, so no entry. On this 1 minute time frame over here, though, we actually did get a little bit of a close above, and that's when I started executing my long positions, which again, I ended up going long, roughly around this area over here. My stop loss was under this candlestick low, and then my take profit was all the way up here, which would have been a great, fantastic trade, 4-to-1 risk to reward ratio, and I was only really risking like $2,500 on this trade. Because I was only risking half of the profits that I had originally made. And luckily for me, I was able to use the same stop loss because the stop loss on my second position was half the stop loss size of my first position. So I was able to use the same lot size, my apologies, which is why I was able to use the same lot size. Because if that was the case, if I would have had the same size stop loss, I would have had to cut my position in half. Now, when it came to the second position, literally as price started to pump and I was up almost like a 1-to-1 R multiple, I ended up securing roughly around this range for a 2-to-1 R multiple. So I'm up 3R on the day and I'm up $12,000. Now, my first position, again, I was risking around $5,000. My second position, I was risking around $2,500, call it $3,000. And I ended up making a little bit more than $6,000. So on my first two positions, my first position, I made $2,620 on one trade, $3,720 on the other trade, and then I ended up making $6,000 on this second trade over here. And then last but not least, we were basically just talking shit in the war room and in the live trading room after we caught those two fantastic dubs. We're up 3R on the day. And what I really like about the way I structure the war room is, yeah, I'm up 3R on the day, but there's other members inside of the live trading room that are up 6R, that are up 7R on the day, because we just discussed so many different type of entries. And the way I structure the war room is to have people and help people as much as I possibly can become their own successful trader without relying on signals. So a lot of people really did eat off of these trades today, although I did okay. You know, a 3R multiple is still a great trading day so far. Now, last but not least, again, going into the NASDAQ. So price ended up dumping, and basically what I said was, now that we've dumped back under the highs under the highs of the day originally, which were over here, we've dumped back under resistance, and we've closed under this area of previous support. You know, most likely we are going to see price fall down into 17,684. You look at the 15-minute time frame, you have a big engulfing candlestick that closed. It's like, okay, yeah, most likely we're going to come all the way back down to this area because resistance was actually rejected. Although this could have been seen as like a fake out, a bull trap. And this is why it's so important to, again, not just have a perfect trade management system, but at least you have to secure profits, because imagine the amount of people that would have just gotten stopped at break even for no reason, especially after being up a 2R multiple. And, you know, that's something you build over time. You know, going back to this 30-minute time frame, what I saw was a 15-minute time frame ended up dumping and closing under resistance. So it's like, okay, well, now you could probably wait for price action, come back down to support, and we'll see if you get another bounce play opportunity or if we get a break of the low setup. Now, in this situation here, after price action had already formed structure, we have the low of the day, we have the high of the day here. Notice how price came all the way down and essentially took out the low of the day and closed super strong with all of this volume. Once this candlestick closed and it closed under that key level, again, that for me was immediate. You know what? I'm going to take another short position, or I'm going to take another trade, and I'm going to end up taking the short position right here, which I ended up taking 3 trades on the day, but the trade setup was just so good, and I was already up 3R on the day. I didn't mind giving back 1R to potentially make another 2 or 3R on the day. So the stop loss I had was actually a little bit tighter than what I would usually do. Now, with this type of situation here, again, I was only risking half of the profits that I was risking of the previous trade, which was like $3,000-ish, which price I ended up closing a little bit later because the latency took me out of the trade a little bit earlier. Now, like I was saying previously, once price action closed under this support range, that was basically it for me to trigger myself into the position on a break of the low setup. We have the higher time frame confirmations. We have the higher time frame engulfing candlesticks, such as the 30-minute time frame. Big engulfing candlestick here on the 30-minute time frame, 5-minute time frame. We also have the break of structure as well, and we close under the key level. Notice how we have all of those bearish confirmations. And then for me, I was really looking for price action to come back down into this previous structure level or this previous structure level. But honestly, once price was starting to get up into a 2-to-1 risk reward ratio, I just closed it and called it a day for a quick scalp, leaving me with roughly a 5R multiple on the day today so far, which was an absolutely fantastic trading day, which is why I wanted to break this down for you guys. But one thing I want you guys to take away from this video is notice I was not married to a single bias. I was never married to buys. I was never married to shorts. I focused on the probability of the setups based off of the data that price action is giving me. I hope you guys enjoyed this video, and I will talk to you guys in the next video. Other than that, I'm going to try and post these more often, these trade breakdowns. I'll leave like the bigger trading days on YouTube so I can have a little bit more time to talk about like psychology, different things along those lines, because it's not easy to have like those $30, $40, $50,000 trading days. But I just wanted to discuss that with you guys. Other than that, everybody, I will talk to you guys in the next video.